Hey, Drippy gang. Welcome. Happy New Year, everyone. I hope you had a blast last year, and this is to the new beginning. So, those who had losses, I'll help you recover. Those who had gains, will continue them. And just best wishes to everyone. And we had a good start to the year. Let's continue that. And as you all know, I am Drippy, your source of options drip on a daily basis. On this channel, this is my YouTube channel. You will know that by now. But here we talk about some of the most exciting setups. You can go to the playlists here, and I have a couple playlists here. This is the playlist for weekly setups, unusual options weekly, and we talk about some of the most exciting setups based on the like options flow, pattern analysis, technical analysis, current economic events, and market structure. So if you want to make some tendies, stick around. My goal is for all of you to achieve financial freedom and create life-changing wealth. So I want to make some things clear. I know a lot of people ask me this question. The way to join this channel on desktop, I would highly recommend to go on desktop, but if not, go on your uh, like mobile browser, and click, you see this join. Once you go to my channel, you can see here join button here, and this is where you can see driprookie is the join is $7.99 per month. Is super cheap. You can read all the perks here, and also where I post my setups, like swing plays and everything, is under community section here. These are all the previous swing plays. So I hope this clears some things. Discord is coming soon. Please wait. And yeah, so I want to talk about today's setups here. First, let me just real quick like update to the, yeah, let's go. So first things first, I'm not a financial advisor. I have a full-time job. I'm doing this for you guys so you can learn along the way. And also, I believe trading is my ultimate destiny. I'm working towards quitting my full-time job and then providing this information and a lot of valuable content for you guys. So if you want to support me, and like if you like using unusual whales, you can get my discount code. I'll post that in a few minutes when we are on the whale screen. And you need to manage your own risk, and you need to calculate reward and everything. I may not be, or maybe in these positions. Again, I'm not a financial advisor. So let's go. First I want to talk about is Boeing. Now look at the Boeing chart. First of all, if you go to the weekly chart, you know that it has been in a clear, you saw this huge like a distribution phase, and then boom, it was just consolidating here for a while and then broke down because of COVID. And look at that destruction it caused, all the way down to 100. Now it's been slowly grinding up, climbing up, creating these flags, and then breaking out, creating the flag, breaking out, creating now this one is a bigger flag. If you go to the daily chart for Boeing here, this is a massive flag here, and this is a bull channel or a flag, whatever you want to call. And the catalyst here are the earnings for Boeing, which is 26th of January. So it can break down, and or it can break up. Keep in mind that this hasn't broken out of the channel yet, so it may continue down as well. So very important, don't just assume that even if flow is bullish, it's going to happen. You need to be aware of both the sides, okay? And another thing I want to point out is that how do I draw the levels? Every time, and I try to show you the real examples where and how to draw the levels, rather than one specific video, because every chart is different, And look at Boeing chart here, this chip chop fest here. So in this case, we need to look at demand and supply zones, because you're seeing here clearly that there's one clear level where there's supply. There's no fixed line, there's no clean, it's not a clean chart. And since it's not a clean chart, we need to rely on demand and supply zones, as well as, of course, wherever we can find levels, we will find the key levels as well. So first talk about the flow for Boeing here. So these are my usual settings here. Premium 50,000, minimum here, DTE range set to 1 to 60, and 1 is because I don't want expired contracts, and out of money only, and I'm looking at Friday's contracts, last Friday. So now you can see here, this is the overall premium, and we are looking at 85% bullish premium here, and these calls are expiring 21st of January, which is close. And also these are out of money 220 and 230 calls, and 225. There are some 210 sold calls, and these might be rolled over calls, because it's maybe they're expecting, or maybe it's spread, who knows. But we are looking at overall premium, that's why. And another thing, you can look at this, to see that these guys are buying 230 and 220 together, so seems bullish, right? And this is not even a spread, and just given by this, the order here, it looks like same parties placing the order. Look at the premium, 129k, 45k. We have 120. I mean, this one is a big order, and even like look at this one, sold 230 puts and buying 230 call. So extremely. I mean, sold puts are also bullish activity, but keep in mind this is a cross order, so this might be an old order just being transferred to different parties. Look at the definition of cross order here. So even ignoring this order, we still have really bullish activity here on Boeing. And looking at the chart for Boeing here, we can clearly see the key levels here are here. So let's go to the I've already created these. So first one is 225 here. Right here you can see clearly it's been rejected here, and it's a psychological level as well. And then we have this level clearly at 233.5, around that level. And then now this is what I was talking about, the supply zone. You can see clearly the price been rejected. What does that mean? That means that it can go to 228, 229 and then get rejected. So this, or it can get rejected directly there. So we need to be cautious in this range. And then finally, let's go up to 239.5, which is like around 240, I would say, more or less, 239.79. And again, this zone has acted as a demand zone in the past. Right here you can see, right here, I'm sorry, let me move this a little bit. Yeah, so right here you can see this. So this whole zone around 230 to 245 is a demand, is a supply zone. And then finally, let's look at bottom support here. So if it breaks below this area, which is around 210, we are talking about, another thing to notice that it's on the support of EMA cloud. And if you zoom in a little bit here, you can see that this was a W pattern. It broke out of this pattern, retested this on this EMA, and now it's on to create a new high. But then another thing to note is that this looks like a double top. So if it cannot break this and it gets rejected again, we can see the sell-off. We have seen that in the past on ChargePoint. We have seen that on Uber. So keep this one on your radar. I really like the setup. The long trigger for me is greater than 219. I'm gonna look for 225 calls weeklies. And if it breaks, another thing to note is that if it breaks to the upside, we had this false breakout once. So in my opinion, if it breaks out now, we'll see a huge rally on Boeing, because you see here clearly this is the same pattern here, and this one is even a bigger consolidation, a bigger accumulation. And if it breaks out, we're talking about like long-term swing here around $278 $300 target. So I'm really looking forward to Boeing, trading Boeing. Hopefully it breaks out, and this will provide us a really good swing opportunity. Now keep in mind, earnings are coming up, and we need to be aware of that. Earnings can really make or break the deal. So keep Boeing on your watch list. Now next one I want to talk about is this is the top play of the week for me. I'm going to talk about this on the Sunday night video as well. It's PPC. Now look at the chart of PPC. Huge earnings gap here. And this is Pilgrim's Pride Corporation. Food, meat, fish, dairy, and not everything needs to be tech. I'm talking about real breakout on this one, because just look at this consolidation here. It's in a squeeze on the daily chart. You look at the weekly chart, it's on the squeeze. And also look at this. You see this? Another flag pattern here. You see this flag pattern here. So if it breaks out, look at this breakout, 28% in a week. I don't think that will happen, but I mean, this stock moves super fast, aggressive. Look at the downfall it had during the COVID, and then since then it's been recovering and it's on the uptrend. And another thing to notice is that earnings are coming up. And one thing I didn't like is that it tried to break out on Friday, but then we had this indecision candle, and that's the reason why I'm also can play downside, because if it was a false breakout, then it can be nasty, and there's a huge gap to be filled to the downside. So we are again keeping an open mind given the current market. It's not bullish. Market is chip chop, so we need to accordingly adjust our mindset towards play short or long. But it is a long setup eventually. If you look at the overall picture which I just gave you, now key levels to watch for this one is 28.16, which is basically this wick, and then here for the long setup 28.75, and then next target would be $29. We have this supply zone, and then finally we have this $30 here, 29.68, and then 30.54 from this previous supply zone here, and then we will evaluate it if it breaks above 30 again. Now another thing I want to point here is that if you look at the 4-hour chart for this, it was in this consolidation for a while. This was a consolidation zone here from this area box, and then it broke out, retested, and now it's on to create maybe the new high, which the breakout we are expecting. And this sector is, again, you need to think about the macroeconomic events, and we are talking about inflation. And the most important thing is that people are going to eat food. So these names, the whole sector, I think the FXG is the I think it's FGX or FXG. One sec. Oh yeah, so this is the consumer staples index, which tracks consumer staple. And if you look at the chart for this one, cup handle breakout, and now it's, look at the volume here, and it's just like on a run here, crazy bull run. So consumer staples are a good inflation hedge, and I'm gonna talk about this more in my spotlight chat with Squeezy. But for now, I think keep in mind that the sector is super hot. It's inflation hedge, and that's the reason why I like BPC from macroeconomic perspective. Not this one. It's confusing because it's not from US. So but similar chart. Anyway, so yeah, keep this one on your radar, and then look at the flow for PPC here real fast. Another thing I want to point out is that, so if you want the discount code for unusual whales, you can see it right here. It's Drippy too hard, and then you get discount. Let's look at PPC here. Yeah, so if you look at within 60-day range here, you can see clearly that, okay, I'm gonna put the bid as well. So look at this, they're buying $30 and $35 call. $35 call, I mean, look at the spread here. Bid is 0.05, ask is 1, and this person paid 0.7, so wide spread, but still. And same thing here, wide spread here, but still paying the premium, 0.7. Now I agree, it's not the best spread, and if you don't want to trade it, I understand. There will be other opportunities, but in my opinion, if a crazy move happens here, the spread is going to it won't matter. But yeah, another thing to note here is that this premium is almost $1 million order, and if I change this not to 60 here, then you can see here that it's excuse me, these are sold calls, $29, and if you look at this order here, it's just a single order, I think, single, like 3.2 million sold calls for 18th of March. So I'm guessing that this person had a spread, whoever this party is, because it's in the same time, around the same time, all these orders. Apart from that, it looks really good, the setup. The spread is really, really wide, so I won't suggest you put all the money in it. Just keep this one as a learning if you really don't want to trade it, because spread is really wide on this one, so keep that in mind. Now let's look at the other one. Next stock I want to talk about is ADI. Now ADI is analog digital and analog devices. It's a semiconductor name, and if you look at the weekly chart for this one, you can see clear divergence here. You see this top here, and this was RSI top. RSI has been declining, and this stock was up, and now finally it broke down. And if you look at the daily chart here, it's clear head and shoulder pattern here, just like how Netflix had, very similar pattern. And look at what Netflix had, pain, real pain, destruction here on Netflix. In just 2-3 days, this moved from 580 to 40 points down, and looks like it's going down more because of earnings. So I mean, like, semiconductor itself, the whole sector is looking really bearish. We have this like a topping pattern here, formation here, and close below this EMA, and that's not a good sign. So yeah, and from a risk reward perspective, I think it's a good play, because it hasn't yet given it hasn't yet sold off like other names like Xlinks. Xlinks already had a huge drop from 224 to 193, and looks like it's going down more. We have Nvidia. Already had this drop, and Nvidia is a well-known name, and ADI is still, I think, in my opinion, just looking at the chart here, we can see some clear, because once it picks a direction, like let's say that it picks a direction, we can see instant move in our favor. Because the reason I say it is because we had the similar pattern here and broke down, and it was in just a matter of week. And the same thing here, it broke down here, the same pattern here, just a matter of couple days. And so yeah, that's the reason why I like this setup, because we can get instant money. And the short trigger would be, you can enter a swing position if you want for, like, I think my long-term short on this one is around 140, but I'm not gonna get it right now. I will wait for confirmation because this is a trend line which has been acting as a support. So once this breaks down, and then I will be interested in swinging it long term to the downside. But for now, for this week, if you are getting weeklies or 2 weeks out, short trigger would be break of 166.3, and it might retest 170 again, and that would be a good entry. But right now, if it breaks down, I think I'm looking at 160 puts, and then 155 puts as well. And we had a sell off on a stronger volume, and I gave you all the reasons here. Look at the weekly chart. Now it was in a squeeze, it's still in a squeeze, and it's going down instead of up. RSI is below 50. Overall looking as bearish setup, and this EMA is acting as a support so far, but if it breaks below this, it can be nasty. But it just depends on the CPI data. Everything depends on that. It kind of looks like similar pattern here. We had this, and then boom, down. But it doesn't have to repeat it that way. Just something I observed. Let's look at the flow for this one. For ADI. So interesting flow in my opinion for ADI, because now you see here these are sold 165 puts, and these were at around the market close. So what does that mean? Maybe these guys had open puts, because if you see here, they bought puts at 165 here, 165 puts, 165, and maybe they sold at market close because of theta decay, or maybe they opened a new position of 155 puts, because if you look here clearly, this was a buy to open order, and we have $2.6 million in 155 puts expiring 18th of February. So overall, a bearish setup in my opinion. If you remove the bids, for example, excuse me, if you remove the bids here, you can see that we have 165 puts, but of course, maybe they sold these puts and bought 155 because they're expecting more downside than initially they thought it would be. But this is my interpretation. I might be wrong. That's why we wait for levels and confirmation. And another thing to notice here is that, one sec. Yeah, so if you look at ADI's open interest here, right? So it's the same thing I was telling you, right? We have this put being bought, and then we have 165, 167.5. The volume on these is insane, and now this volume is more because also these are sold as well as bought, so we cannot judge exactly where's the net premium for 165, but for 155 it's clear that these were the bought puts. So, and these were bought at the when the underlying was 167.26, and if you look at it right now, it's at 168.84. So this guy is in loss right now, but it's still holding. So we'll see, we'll evaluate it Monday. But yeah, so far looking at really bearish setup. We can wait for confirmation. Once it drops below, I think it would be nasty. Another name in this is Keys, and you can see that Keys also broke down, and there's no immediate support until 183, 185, and it's the similar, like electronic technology, and these names are selling off now after being so high. These are growth names. Growth names are suffering, as we all know, because of inflation, and earnings are coming up as well. So that's something to keep in mind. Next one I want to talk about is Dish. Interesting setup again. Now let's look at Dish chart from a weekly and a monthly perspective. Now you can see here that this is a formation of a cup, formation of a kind of like a cup shape pattern, and excuse me, the Dish moves in a weird way. It moves down and then up. So that what that means is that, it's a good opportunity for us to capitalize if it swings to the upside, because it could be a great swing play like GPN was. It's looking just like GPN before the breakout. Similar pattern here before the breakout here. Very similar pattern here, except that this one is also in a squeeze. And the whole sector is actually moving. This is consumer services, cable, satellite. So if you look here, we have uh, AT&T, showing strength here, trying to reverse and curl up. And then we have this Discovery. Discovery broke out big, um, almost up 16% on Friday. So the whole sector is moving along, and this gives me more confidence. And this is also a value stock because its P by E ratio is around eight. So it's super cheap if you think about it. And it's a good 5G play as well long term. So in my opinion, it's looking as a great play for a swing play. And I think that if you look at the flow is not that significant because it's not a really super liquid name, but it does have in 160 days someone got $40 call. I mean, spread is not that wide, which is good, but I mean, come on, like $40 is way far. And this guy got at 33.89. Right now stock is at 34.38. So he or she is in profit. And key levels to watch for us is break. I mean, this was a strong engulfing candle, so I'm expecting continuation. And then I think I'm expecting it to retest the 35 level. And then if it breaks out, let's say the squeeze breaks out, I think we can quickly see 37, 38, because that's how the stock moves. Once it decides to go, it goes for a couple of days and then it kind of retests. The same thing to the downside, same thing to the upside. Look at this huge candle here, but this was before earnings. And the volume has been kind of increasing as well. Relative volume, if you see here, we are seeing some bigger relative volume than the other days here. So that's the reason why I also like this setup. RSI is also curling back up, and it's positive. It's 50 plus. So definitely I'm watching this one for a swing play. I think what I would like to do is buy $35 calls for maybe next week expiration. Whatever is the next available expiration, you can get it, but I would like to swing it. So that's why I want to buy some time on it. But now keep in mind that it's still a bear flag and it can break below as well. But in order for you to have a confirmation that it might break below, I think this is a strong support. So if it breaks below 32.43, we're talking about 31 and then back to $30. But just a bullish setup in my opinion, and the sector is moving along. So I think what's the equal weight? Let's see what's the name of that. Yeah, EWCO. So now if you look at EWCO, nasty breakdown, and then now it's just consolidating here in this chop zone, but all these EMAs are catching up. It could break below as well, but just looking at all these stocks, it looks like it's breaking to the upside rather than downside. And these are value names as well. So that's my thought process right now with Dish. Now next stock I want to talk about is CROX. Now I don't even know why people buy CROX, to be honest, but here we are. We had a gap here which filled, then it bounced from that as expected, and now it's a bear flag. I mean, look at this, from 177 to 125. Was a great shot. I missed it, but even now we have more opportunity. And this is the same thing I was telling you guys about ADI. How RSI is declining and this stock is just like on a non-stop run, and now that run just all this inflation bubble is popping on this one. And it's looking like a great short setup. Is below these EMAs, and it's been consolidating for a while. So you know, it's like it might be in a squeeze on a lower time frame. Exactly, it's on a 4 hour time frame, it's in a squeeze. And short trigger would be below 122.4. We're talking about 115 level retest of this demand zone, and then below that we are talking about 106. And also there is a huge gap to be filled here, so that's also to keep in mind. If it breaks this trend line, which has been acting as a significant support, I personally think that it will show some kind of reversal sign, retest this, and then break down. But if it breaks down instantly, oh my, we will get money. So keep this one on a longer term swing as well, like Dish. But for now, super bearish setup. Uh, let's look at the flow on this one. Flow is also interesting. And if you look at the flow here, we can clearly see that this order was placed at 15.6. That means at 3 o'clock, 120 put. And stock was at 126. Expiration 12 days. So, and big order, 500K order here. So this is the strike I'm also looking at, 120 put for January 21st, 12 days. It's a good risk reward, I think, and I like the setup. So I like overall the setup, and I think the overall bearish premium is also 75% plus, and 120 is 5 points down, which can give us good amount of money. So yeah, I like CROX short. Next one I want to talk about is CPB. Now this is Campbell Soup Company, and one thing to notice here is that super interesting setup, because it's in a squeeze. Of course, it broke this same pattern I was telling you about Dish, this inverted pattern, and then it broke out strong, 5% up last week. And again, I told you that this is consumer non-durable food, and all these names will get love because of the inflation, because they can increase the price and people will still pay for it. Now keep in mind, the RSI needs to cool off a little bit in my opinion, and these EMAs need to just like catch up a little bit before it proceeds with creating and filling this gap. So hopefully, my hope is that it retests the 45 level. That would be a good buying opportunity for us, for $50 calls, and we can buy longer dated calls on this one. And key levels to watch is break of this 46.27. If it does, we are talking about for like 46.92, which is around 47. And it hasn't really tested this gap before, so I think we will see some kind of sell-off here, retest, and then continuation and filling this gap. So you need to be aware of that. And if you look at the flow for this one, CPB here, we had these two orders run at almost market close of $60 call, but this is 2023, and this is way out of money. And this guy, it's not a big order, but then again, this one expiring in 12 days is around money, which makes me think that this person is maybe will buy the shares, and the contracts are cheap. So keep CPB in your radar. I like the setup, it looks super cool. I like these kind of breakouts which continue, and it can get us good decent amount of money. But again, the stock has like chip chop. If you remove this, it breaks out, breaks down, breaks out, breaks down. So it's not a stock you would want to hold for long. You need to take your profit. So that's the reason why I'm saying that wait for a pullback here to these EMAs, maybe 44.3, 44.5, 45, and then get in a position uh, on this one. Anyway, so moving on to the next one, I like this setup really well as well is Peloton. Now, I mean, it's just funny because PTON was like $160 at one point of time, and now it's sitting at $35. Insane. But looking at the chart though, it's getting super interesting here, and the reason I think is here now we have this RSI divergence here, clear RSI divergence, and this is a bullish divergence here. This is a higher low, and this is a lower low here, and we had two green days in a row, and it has done that in the past, and it sold off two green days in a row and sold off, and that might happen again. It might sell off, it might come to $30, retest it, and then break out, or it could just break out tomorrow. So these are the key levels to watch for PTON: 38, 42.4, 46, and then 455 level. Earnings are the catalyst in my opinion, and it does seem like it's bouncing off this from this demand zone, and 35 is kind of cheap for PTON in my opinion, but I'm not a fundamental investor anymore, so I'm looking at this from a trading perspective only. It's a falling wedge setup, and looking at the flow for PTON here, I mean, we have these calls 40-day expiring, so 18th of February, $40 call, stock is at 35, and we have $60 calls as well. We have 50-50. This guy still has time, 2024, so it's a leap. But apart from that, there's only one sold call for I think 1457 is the time. So this is a spread in my opinion, because this guy is buying 50 and selling 40 calls, and this is 18th of February, so this is a spread, and you can visualize the PNL for this person. If you dig into the trade for this one, you can see that if the stock actually rises, this person is going to lose money, and it's a credit spread, and if it declines here, the person will be in profit. So this is a bearish spread, but then again we have if you look at the overall premium here, it's bullish. We have 80%, and then 18th of February is the maximum concentration with $40 calls. So interesting chart. It is on a downturn, so if it cannot break, I think my long trigger in this case would be break of 36. If it cannot break 36, and it can go down all the way to 30, so we can play it both sides. I'm not married to going long on this, but setup does look bullish right now. I don't mean like it's gonna go to $100, but come on, like look at this gap here and then sell off, and it's cooling. It needs some cooling off. It needs to have some kind of even a small technical rally, and this is a loading zone in the past. This has been a loading zone in the past, so we need to have this on the watch list. 36 to 37 is the key level. Above that we can send it, so definitely keep it on your watch list. I will as well, and I think those are the only setups I have for this week. I want to talk about MRNA since we are in this trade from driprookies. Real quick, the reason why I'm bullish on MRNA. So we have MRNA event coming up Monday pre-market. That's one reason CEO is gonna talk, and then another reason it's in demand zone here. Clearly, you can see that. Another thing is if you look at monthly EMA 21. It has never tested that EMA before. So 9 and 21 are the where I think algorithms kind of start buying, and that's why we have this support here, and it has never tested that. Excuse me. So I think that is a strong support. Another one is because it's in a demand zone here. um, this is a fib level 195, 197. So I mean, it can sell off, it can go to 196 and then rebound. But since there was an event, I just thought that it would be nice to have some calls going, lottos going into the open tomorrow. And that's the reason why I got it. Now, saying that, I have February calls for 230 and 250. So if it goes, like if it breaks down, if it goes to 197, I'm fine holding it. But I might get short term puts to compensate for it. But I think my plan is to just hold those calls because we are seeing COVID cases increase. And overall, I think mRNA does get, like, the same thing I was talking about. We have RSI divergence here, this low here, we have RSI low, and then this is a, like a higher low, and this is a lower low here. So similar setup. It has been selling off like crazy. So that's the reason why I think, this one is a riskier trade. But if it works out, the profit would be super, super nice for us. And then we have the flow here, which is looking really bullish as well. Um, if you look here clearly, these are cross orders. So that's something to keep in mind. But these are expiring in 12 days, 220 calls here. And then someone just loaded 250 call in 40 days. So yeah, this is not me. I didn't put 150K, but yeah. Another thing to keep in mind is that this person bought repeat. So this was 940.42, 940.42, 250 call again. So maybe they know something. Maybe it's the CEO. And then, if you look at the overall premium, super ultra bullish here. And the reason is because of the thing I told you, right? Because of these cross orders. So let's see what market brings us for tomorrow. mRNA pre-market, I'm hoping some nice, so let's see that what could happen in pre-market. So if you go to the lower time frames here, now pre-market, if it's around, let's say 220, right, it needs to break and hold 220, and then the next target would be 225. Now if it's down, let's say that it's down around 208, then it needs to hold that as a support. And if it jump, that's what I'm thinking right now. So these are my levels here, 220 and 205. So below 205 we can play puts. Above 220 definitely we are looking at 225. 233 is the fib level, which is also my profit target, profit taking zone. And then finally 250, we have a gap here, and mRNA kind of has filled all the gaps in the past except this one. So I think we might fill this gap. I'm not saying on Monday, it could be, but leading into the week we might. So these are all the setups from me, folks. I'm working on everything I promised. A lot of videos coming soon. So just stay put. Please like and subscribe my content. And I will see you guys soon. Bye.